Hello guys, it's Max here from Daily Market Movements and welcome to another Market Outlook video where today we're going to be discussing the trading week, the shortened trading week I must say, running from the 3rd all the way through to the 7th of July. Of course, this is the first trading week of the 3rd quarter and of course the second half of 2023. We've just closed out of the first half and what a half it was. We have the S&P 500 up double-digit percent since the start of the year, and of course the main outperformer, the Nasdaq 100, is up over 31% in the first half of 2023, meaning it is the strongest first half of a year since 1983. That's more than 4 decades. And the big question that many investors are asking is, will it continue? Are we going to continue to see outperformance by the big tech names going into the second half of 2023, which of course we will discuss a little later in today's video. But let's just quickly look at the economic calendar going into this shortened trading week, because of course the markets are closing slightly earlier than usual on Monday, and then of course on Tuesday the 4th of July it's Independence Day in the US, therefore the markets are closed. So we only really have 3.5 trading sessions going into this week. But despite the markets closing slightly earlier than usual Monday, we are still expecting some economic data, which is the ISM manufacturing data. So I'll be keeping a very close eye on that. And then of course Tuesday the markets are closed, and then on Wednesday we have a FOMC meeting, which I'm sure we will hear some feedback from a few Fed members. And then moving through to Thursday. Now Thursday is a very busy day. In fact, it's the busiest day in terms of economic data releases. We start off with the ADP jobs numbers, which is going to be very important, followed by the initial jobless claims. Then we have some ISM manufacturing figures as well as services PMI. So lots of data to be released on Thursday. However, in my own humble opinion, I think the most important piece of data that's due this week is of course the jobs number, the non-farm payrolls that we hear on Friday. Of course, the Fed as well as many investors around the globe are heavily focused on the jobs market within the US. Are we perhaps going to see some cracks within the labor market and see a downtrend when it comes to job openings? Well, we will find out on Friday, but that's definitely the main piece of data that you want to be keeping your eye on going into this trading week. Now, before I go any further with today's video, I just want to give a massive shout out to everyone watching this video who's part of my free trading signal group. We had a fantastic month in June. In fact, we had a 87.5% win rate where we won 7 trades and we only lost 1, and we yielded over 23%. So a massive congratulations to everyone who is part of my free group. And if you at home right now watching this video, you maybe perhaps want to join my free trading signal group as well as receive my free daily market research, which I post every single morning to help you guys navigate through these very volatile markets, and all you have to do is scan this QR code on your screen. That will take you to my website where you can sign up. It takes 10 seconds and it's completely free of charge. But now let's talk about the major US indices and where they're sitting technically. The S&P 500 for the whole week, I had come out on YouTube and share the fact that I had identified that the S&P 500 as well as the Nasdaq 100 were trading within this bullish flag pattern, and we did actually manage to break out of this bullish flag pattern on Monday or Tuesday. When that was the case, I did say that we are likely now to go and target the swing highs here for the S&P 500. So in terms of price to swing highs, sat around 4,440, and as you can see at the end of this trading week, we managed to close above 4,440, which is very positive going forward. In fact, I actually believe the S&P 500 has the potential now to go and trade up towards 4,500. Now moving over to the Nasdaq 100. Now the Nasdaq 100 of course is the top performer for the first half of 2023, and very similar to the S&P 500, we were trading within this bull flag pattern, but again on Monday and Tuesday we managed to break out towards the upside. And I had been saying on my free signal group over on Telegram, and as well as coming out on YouTube and sharing with you all in my free daily analysis videos that I post here, that I did expect us to go and target the swing highs here for the Nasdaq 100, which sat around 15,250. And again, we managed to close out pretty much near those swing highs at around 15,200 here for the Nasdaq 100. And I still believe that we can go 200 points higher up toward that 0.78 fib area, which sits at around 15,400. Now moving over to the Dow Jones 30, just want to start by saying a massive congratulations to everyone's in my signal team. We do have a buy trade open here in the Dow Jones 30, and we bounced perfectly off the 50-day EMA. Of course, we have formed this inverted head and shoulders pattern. We did break above the neckline to then go and back test it, and we actually fell slightly below that neckline to go and test a 50-day EMA. And I said that this week it'd be incredibly important that we bounce here and we see buyers step back into the market, and that's exactly what we managed to see. Buyers have stepped back in, they've protected the 50-day EMA, and we're now successfully trading back above the 34,000 area. In my own humble opinion, I do believe that we're going to go and trade back up towards 34,500, and I even think that we've got the potential within the next month or so to trade up towards 35,000. I think talking about all of the three major US indices as well as the broad stock market, I think it's important to understand that we are now exiting a period of seasonal strength. The months of June all the way through till mid-July, the markets are typically bullish, especially where we are right now with regards to the presidential cycle. That's a 4-year cycle, of course. So I expect to see some further gains going into the next week or so, but I think as we get into mid-July, we are going to see perhaps some, healthy correction, a pullback, or just a slight pause in this market strength that we've seen over the past couple of weeks. I think we can't really expect the Nasdaq 100 to rally the same way it has been doing so for the next half of 2023, because if you look at the chart, is pretty much vertical. I'm not saying that we're going to have this massive crash where we pull back 10%. That's not what I'm trying to say here. But what I am saying is, don't expect this rally to continue as aggressively as we've seen in the first half of 2023. I still expect the markets to go and hit all-time highs, especially the Nasdaq 100 by the end of this year. I feel like, after August this year, we are going to see a very strong end to 2023. That's what my cycles are telling me anyway. But if there's one message that I could share with you all, is that don't always focus on the daily RSIs. A lot of people are commenting on my YouTube channel saying, Max, why are you telling people to buy here? The daily RSI is overbought. We have a reading of 72. And you're right. Short term, we may see a potential pullback in the likes of the Nasdaq 100, the S&P 500, for example, which have been overbought. But I would advise many of you to broaden out your analysis. Look at the markets on more of a weekly and a monthly chart, because right now on the monthly chart, the Nasdaq 100 and the S&P 500 are nowhere near considered to be overbought on their RSIs, and that's of course due to the bear market that we've just come out of back in 2022. That's going to wrap it up for today's video. I would like to wish all of my US viewers a happy Independence Day and of course a long weekend. For those who've been watching my videos for some time, then please do not hesitate to scan this QR code on your screen. It will give you full access to my free Signal group over on Telegram, and of course you will also receive my free daily market research that I post on that same group. But thank you very much for watching today's video. If you haven't done already, then please subscribe. Let's all go make some money this week.